Today we are going to discuss an important topic that is going to help you achieve your financial goals. Investing can help you achieve your financial goals and build your wealth even faster than saving. What are the keys to building wealth through investments? I am definitely going to share those. I'm also going to share one mistake that I made that cost me thousands of dollars that you definitely want to avoid. And I'm going to share the most effective thing you can do with investing to make sure you achieve financial freedom. All right, let's dive right in. The first key to building wealth through investments is to start early. The earlier you start investing, the more time you have to take advantage of compound interest. Compound interest is when the interest you earn on your investments is reinvested, and then you earn interest on that interest. Over time, this will significantly grow your investments without you having to contribute even more money. And I want to take a look at a graph so you can see exactly what I'm talking about here. If you were to invest just $10 a day, so $300 a month at a 7% return on your investment, and you did that for 44 years, you would become a millionaire. But the awesome thing is that you're taking advantage of compound interest. So the amount that you put in is only $158,400. And then the amount that compound interest earned you is $899,206. When you break down the math like that, it is mind-blowing. You're only putting in about $150,000 and you're becoming a millionaire. Comment below and tell me if you agree that compound interest is the eighth wonder of the world. The second thing to building your wealth through investments is to diversify your investments. Diversification means spreading your investments among different assets. This could include stocks, bonds, or real estate. If you are diversifying, it helps to reduce that risk of investing. Because if you were only invested in one certain investment and that investment tanked, that would be your entire investment gone. But if you are diversified, if you have different investments and one doesn't do well, then you have the other ones to offset that one that did not do well. And for me, I like diversifying in real estate and the stock market. I own physical properties that I have as long-term rentals. So I create cash flow that way, and I'll also be able to take advantage of the appreciation of those properties over time. And I actually did take advantage of one of those. I sold one of my properties pretty recently, and if you're curious on why and how I did that, I will leave a link to the video about that above. So if my stock market investments aren't doing so well, I still have my rental properties creating cash flow for me. But then also with my stock market investments, I don't have just one individual company that I invest in inside of the stock market. I have a few different individual companies, and then I also like to invest in an index fund. And with an index fund, it has a lot of companies inside of just one index fund. So if one of those companies inside of the fund doesn't perform well, I'm not concerned because there are a whole number of other companies inside of that one fund. If you're not interested in real estate and the stock market, you can definitely just do the stock market and still diversify your investments inside of your investment accounts. And then another important key to building our wealth is to invest consistently. This is really key. We don't just want to make one investment and then call it good. We want to continually invest over time. And if you have a 9-to-5 job with a 401k, that is an easy way to invest your money and make sure that it gets invested, because you can just take a percentage of your paycheck and have it automatically be put into your 401k. And that also helps you take advantage of dollar cost averaging. And dollar cost averaging means that you are investing a certain amount at intervals, so over a certain period of time, regardless of the price of the investment. Just like I mentioned with your 401k, if you have a certain percentage of your paycheck being put into your 401k every 2 weeks, this is a perfect example of dollar cost averaging, because you have that same amount being invested every 2 weeks, regardless of the price of the investment. This can help smooth out those ups and downs of the stock market over time, because you may be buying at a really low price and then later you might be buying at a higher price and then it could be low again and then higher again. But if you're consistently investing, you're able to average those out over time. And if you don't have a 9-to-5 job, if you have your own business, you want to make sure and set up your own investment accounts and invest in those accounts. You can also automate those as well. And if you're wondering how to do this, how to get your investment accounts set up, actually invest your money and automate it, I do have a free masterclass. I will leave a link below in the description, and you can click on that and get access to the masterclass, which talks about these exact things. And honestly, automating our investing is the key thing that we can do, the most effective thing we can do to make sure that we get to financial freedom or that we are able to retire. If we don't have to think about our investments and we can automate them, then we are actually going to invest our money. And then educating ourselves is another key to building our wealth. We can learn about mutual funds, index funds, ETFs, individual stocks. The more that we are able to educate ourselves about our investments, the more successful we are going to be with our investments and with building our wealth. And honestly, I have a lot of videos about all of these topics on my channel. So make sure and just do a search on my channel for something in particular you are wondering about. You can type in ETF. I have a video about that. You can type in index fund. I have a video about that. I also have a video about the differences among ETFs, index funds, and mutual funds. Make sure you are educating yourself in some fashion about investments, because when we know exactly what it is we are investing in, we are going to be a lot more successful investors. And just a quick experience to share with you, when I had my 9-to-5 job, I had a 401k rep that came in and talked about our 401k options, and I knew that I wanted to be investing more of my money. And so I talked to him later on and I asked him, what else can I be doing to invest my money to make it work for me? And he said, you can set up a life insurance policy. And so I thought, okay, he's smart. I'll just trust him. So I went and did all of the testing that I had to do in order to qualify for a life insurance policy. I set up the policy, I started investing money inside of the policy, and it was thousands of dollars. And then later I started doing more research about investing, and I found out that I did not actually want to have a life insurance policy, in particular the one that I had. And so what did I do? I ended up consulting someone else that I trusted more, asked him about the policy, and he said, yeah, Tiffany, I would not be investing in this if I was you. And so I ended up canceling that life insurance policy, and I lost my thousands of dollars. But had I not have canceled that, I would have lost even more money. And also, if I would have educated myself beforehand, I would not have set up that policy in the first place and not lost the thousands of dollars. And while yes, I did learn from my experience, it doesn't mean that we always have to learn just from our own experiences. We can learn from other people's experiences and mistakes that they are making so that we don't have to make those mistakes ourselves. Make sure you understand everything you are investing in, or don't invest in it. And another key to building our wealth through investments is to stay disciplined. I know it can be tempting to react to those market fluctuations when things are going up and things are going down, but sticking to our investment plan and being disciplined means that we are going to be a lot more successful and we can achieve our financial goals and get better long-term results. We want to avoid chasing those short-term gains and focus more on our time in the market and less on timing the market. And this is yet another reason to automate your investing. If it is automated, you are not constantly looking at it and becoming fearful or greedy. It makes it a lot easier to stay disciplined. Comment below and tell me if you've been able to stay disciplined with your investing. Rebalancing our portfolio over time is another key to building wealth through investments. Over time, our portfolio could have more in stocks and less in bonds, or more in a certain company and less in other companies or other index funds. We want to keep an eye on that and make sure that we have our investments where we want them. This can help us avoid taking on too much risk or missing out on potential gains. And then tax planning is another important key to building our wealth through investments. Of course, we want to pay as little as possible in taxes. We can take a look at those tax advantaged accounts and put our money in those if we want to get a tax break right now, or we can put them in accounts that we pay the taxes up front and then they grow tax-free over time, so that when we take out our investments, we are not paying taxes then. It really depends on your type of situation, which type of account to set up. Make sure you understand the tax implications of the investment account you are going to use. Keep in mind that when we have a long-term mindset with investing, we are going to be a lot more successful. If you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and to the little bell to get notified on when I post new videos. And if you want to see even more content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.